Hi there, welcome to today's Ftse clinic, which is going to be on investments from cryptocurrency to bank savings. So thanks very much for joining us. My name is Jo and I'm one of the founders of Ftse, and I'm joined by Oscar, who is our expert today, who will be running through a short presentation, and then we'll be available for a Q&A session at the end. So if you would like to ask any questions throughout, there's a box on the right hand side, a chat box where you can enter in any questions, and we will address those when Oscar has finished his presentation. So over to you, Oscar.
Hi everybody, thank you so much for joining us today. Like Joe said in the introduction, today is going to be a very broad overview of investments, everything from cryptocurrency to bank savings, and I'm going to try to give a very brief overview of how the areas work that will hopefully help you either navigate investing yourself or speaking to an investment professional, or if it's just pure interest at this stage. One of the most important things to remember from this is that although I am a fund manager and a wealth advisor, please don't construe anything that I say today as advice. And obviously, if you're further interested in anything, that I do really propose that you speak to a investment professional about it. So one of the things that I get asked a lot now is cryptocurrency. What is cryptocurrency? How does it work? And my favorite question is, what's it going to be priced next year? Which is obviously a question I'm not going to be able to answer at all. Cryptocurrency is an extremely complex area for some, and I think a lot of people try and make it more complex than it actually is. But today, I really hope that I'm able to make it so that you're able to understand it, along with all the other instruments that we're going to be talking about. And like Joe said, at the end, if you have any questions, please just reach out. I'll ask Joe to put my personal email address in the chat box as well. So if you have any more specific questions that you don't want to ask in this session, or if something crops into your mind later on, I'm more than welcome to field those questions. The first slide we're going to talk about, though, is if you're able to master this slide, you are able to master investments. It is very simply what is known in the industry as a supply and demand curve. What this says is, and I'm going to try and draw now, so bear with me. What this says is that you have what is called an equilibrium. So where supply, which is this line here, meets demand, that is where the quantity is equal to the supply and demand, and that is where you get your price. So as an example, there is X amount of supply of apples in the UK. The demand for apples is here. And as such, 1 million, say, I was obviously more than that, 1 million apples are transported to the UK, which means that they are priced at P1. What happens when demand increases? So perfect example is during the pandemic, everybody was baking, presumably then the demand for apples went up. So what you call this is that the demand curve is pushed out, which means that the quantity demanded is obviously greater than the quantity that was demanded before, which means that the supply will have to be increased and price increases with that. Now, I understand that I went through that relatively quickly, but basically, in short, the more something is sought after, the more pricey it will be, and the more restricted the supply is, i.e. how much is available of an item, the higher the price will be. So this brings us very, very neatly on to the next slide. We are going to be coming back to this slide and exactly what it means for all instruments. But then this brings us to, which I believe is the reason why a lot of you are here today, is cryptocurrency and how it works and why it's such an interesting topic right now. So first of all, as you can see, there's only 2 images on this whole slide because I feel like these are the best things that describe exactly how cryptocurrency works. So on the left, you have what is currently used in all of the banking systems, where all of the gray dots are people, and the big green dot in the middle is the bank or the institution. So what they do is they hold a centralized record of absolutely everything that you hold. So if I have £1,000 in my bank account, that is held within the green node, so that when I go to the ATM to take out some money, that is the money that comes out, and then their record is updated that I've taken out £100, say, and then my new balance is £900. This is essentially what cryptocurrency has completely broken down and said this system doesn't work, and it basically makes every individual into their own personal bank. So when you do this, the benefit is foremost that it's extremely hard to steal or move or fraudulently move any money out of anybody's account, because all these nodes, as you can see on the right hand side, they all correspond with each other and they all talk to each other. So if I was to have 1,000 Bitcoin and I decided, I wish I had 1,000 Bitcoin, but if I had 1,000 Bitcoin and I decided to sell 10, it doesn't just go to a centralized position and get sold. What happens is that all the nodes agree that I have sold 10 Bitcoin. I now have 990 Bitcoin, and they're all updated simultaneously. So it breaks the system of you can't go to a bank and steal some money. Because if I was able to fraudulently say, oh, I don't have 1,000 Bitcoin, I have 1,000,000 Bitcoin, my record would be the only record that says I have 1,000,000. And as a result of that, all the other nodes would go, you don't, you have 1,000, and then it would override my record. This is what makes Bitcoin and this part is known as the blockchain so interesting. Another thing that makes Bitcoin and cryptocurrencies really, really interesting is the fact that they have a limited supply. So in any economy, when the government requires more money of that economy, they can simply print more money. So there is a supply and demand, as we just talked about, of money. So you can, the more money you want in an economy, you print more money. Whereas with crypto, this is what makes it so different and so difficult, because this supply curve here doesn't actually look like this at all, because you have a finite supply. And someone in the chat who is a lot more intelligent than I am can probably tell you when, for Bitcoin, when they've said that it's going to finish. But the supply curve basically looks like this. So you have a set quantity of how much you can have. And as you can see here, because supply can't move to meet demand, you have very sharp increases and very sharp decreases as and when demand moves. So when you get further demand of Bitcoin, the price is forced up. As you see these D1 and D2, as it moves up, you get D3. It is, as you can see here, P3 ends up a lot higher. So as demand for, I apologize for my drawing, by the way, it looks like a 3-year-old. As demand moves up and down, Bitcoin and the price moves up and down. Whereas what would happen in a normal economy is you would have the demand for your currency increase like this. So the government would go, oh, okay, well, actually, what we can do is we can afford to print more money. So you would move, Q would move to here, and price would stabilize at whatever level that government would perceive that they want price to stabilize at. So the only thing that happens is that you move along this curve as demand increases or decreases. And the same, if you had here demand fall to D0, I'm going to do it again. If you had demand fall to D0, what you would do is you would simply move your supply curve to S0, and you would have the same price at the same equilibrium. So because Bitcoin or any cryptocurrency, I believe, has this completely fixed supply curve, which cannot be moved, you see these sharp increases. Now, I don't know where Bitcoin is going to be in the future. I don't know what the price is going to be. Unfortunately, if you're in this seminar for that, I'm really sorry to disappoint. JP Morgan, and if anyone wants me to send them a paper, I'm more than happy to, wrote a really interesting paper about Bitcoin. They predict the value of one Bitcoin to be around $140,000 each because of this static supply curve. My view on that is that I'm absolutely not saying that it will never reach that level, but if you are invested in any kind of crypto, you are potentially in for a very, very bumpy ride. And that's because of mostly to do with regulatory issues. So as central banks or central governments decide that they don't particularly like crypto, or they perceive crypto to potentially be a threat to their own currencies, then you could see heavy regulation. So for most governments or countries, what they want is obviously they want their currency to go up and down, because the higher your currency is in a country, the easier it is to buy externally because your imports are cheaper. And vice versa, your exports, because your currency is high, is more expensive. So that's why people want to have this floating exchange rate. If you remove your exchange rate and you get a fixed one, to example, Bitcoin, a lot of you will have heard about the problems in the Eurozone and the Euro, where everybody has a pegged currency. Because countries like, and I'm not picking on any country here, but countries like Greece would obviously have preferred a lower currency because they would want other countries to perceive their exports to be cheap, so they would have bought more from Greece. But the problem they had was countries like Germany, Spain, and France had really strong economies, especially over the past 12 years, which have pushed the price of the currency up. So Greece haven't been able to be competitive. If governments start to feel like Bitcoin or cryptocurrencies are a threat to their sovereignty or their ability to trade, I think you're going to see a very, very different approach. Obviously, the best thing that can happen for cryptos is that they are able to be traded much more frequently and much easier. But I think that's going to be the real hurdle that these currencies have in the near future. We've seen a bit of a taper off recently. Again, I just think that's short-term volatility. The thing that worries me most about Bitcoin is that I read somewhere that about 96% of the value is held in about 5 wallets, which is a wallet is like a bank account. That's potentially a big issue, because obviously what you want, like any currency, is you want it to be relatively spread out, so that the supply can meet the demand. So when someone wants to sell Bitcoin, there is somebody to buy it. And when somebody wants to buy Bitcoin, there is somebody there to sell it. Otherwise, you get these, I'm going to draw the graph again, these really sharp increases as demand increases. Whereas if there is somebody to sell, demand meets its own supply, so the curve isn't as sharp. It's extremely interesting. It's a fantastically interesting area. I mean, I personally, on a personal note, I really hope that it takes off and it is the future, and we see it integrated more and more and more. I manage 3 funds. Sorry. We don't hold any, or I don't hold any direct exposure. I'm very happy to view this one on the sidelines for now. But it is obviously an area that is extremely interesting. The next slide I wanted to talk to you all about is equity investment. So this is people think this is the largest investment area. It isn't. Debt is actually debt, and foreign exchange is the largest, then it's debt, and then it's equity. But equity investment is probably the one that is most well known. There are 3 main types of investing, and it is extremely basic. Again, I think a lot of books are written about it on how to invest and what not to do in the pitfalls, and we can go through a couple of those. But the main thing that people need to remember is there are 3 fundamental principles to investing that everyone needs to understand. And I told you we were going to do this. We keep on going back to the same graph, right? Because the price of a stock is 100% dictated by its supply and its demand. So I'm going to pick another example that's been in the news very recently that I think most of us will have heard of, and that's Tesla. So the demand for Tesla, I mean, I couldn't even draw it out here, but demand for Tesla stock has flown through the roof. And at the same time, people aren't willing to sell. So you've had this really, so I'm just going to do, I mean, it's moved obviously a lot more than this, but we're going to do this here. So the demand for Tesla shares have moved out here. But at the same time, you've seen a reduction in people willing to sell. Okay, so you've gone from, I don't know why they haven't called it S1, but whatever, S1 to S, that's a 0, yeah. And you've seen reduction in supply, an increase in demand, and the quantity on the market has been about the same. I don't think Elon has taken any real profit, and I don't think any of the big institutions have sold out. So what you've seen is an explosion in price. Do I think that Tesla is overvalued? I personally believe that all stocks on the stock market are fairly valued by definition, because it is what people are willing to pay for them. So it's very hard to talk about a specific stock and to say that it's overvalued. And obviously, I personally, I've been saying this for a few years now, I don't think that Tesla are going to be making, I have said that I don't think Tesla are going to be making cars in the next 10 years. I'm probably being proved wrong with that. I thought they were going to move much more into batteries, and I thought they were going to be supplying all, if not most, of the other car manufacturers of batteries. But now Tesla, because of Tesla's share price, they're worth more than the other top 5 put together, I think it is, like Toyota and General Motors and stuff like that. So they're probably going to have to review their business plan slightly. But fundamentally, the reason why Tesla's price has been driven as high as it has is the innovation, obviously, within electric cars. So I personally see it as a stock that is fairly valued, but this graph here, and for equity investment, it is exactly the same for every single stock. So you see some stocks be massively undervalued because they've fallen out of favor. So a really good example is Marks and Spencer's. If any of our viewers are in the UK, Marks and Spencer's is like a posh Walmart. Basically, people don't particularly like buying Marks and Spencer shares. They perceive them to be relatively undervalued. So the demand for Marks and Spencer shares has fallen, and as subsequent to that, the price has fallen. It has fallen to such an extent that actually the profits that Marks and Spencer's makes every year is almost as much as the company's worth. So Marks and Spencer's earns its own share price in profits almost every year, which makes it an extremely attractive investment, in my opinion. I'm much more likely to buy Marks and Spencer's, by the way, than I am to buy Bitcoin, which probably says a lot more about who I am than anything you guys need to know. But that's called value investing. So you look for stuff that you perceive there to be value in the long run. So I told you we were going to talk about 3 principles. The next one is quality. Now, quality is when you find a company, and you can make the point for a lot of companies that they fall into various different categories, but an example of a quality company, in my opinion, and you could also be as a growth company, would be Apple. So Apple is obviously known for making extremely good products. Now, you might not agree with a lot of the stuff that they've done in the past, especially regarding child labor and stuff like that. But when Apple do release a product, it tends to be extremely high quality. A lot of us are probably sitting with iPhones right now, so this can be seen as a quality company. And then in the last category, you have a growth company, and growth companies are what has taken off since the recession in 2008, and that is stuff like Tesla, Google, Facebook. They are companies that you believe their profits, their market share are going to grow over the short to medium term, so you place them as growth companies. The best way for people to invest, in my opinion, is that you have a blend of these three. So you find companies in areas that you really believe in, and you then go ahead and you buy stocks or shares off those companies. The way that we do it in-house is that we have about 30, it's called a 30, 40, 30 approach. It's very broad. It's basically 30% in value, 30% in growth, and about 40% in quality. And it's a very simple, it's a relatively simple way of investing, but it's proven in the past to be an extremely easy way and extremely profitable way of investing. You will make the most money in the short term investing in growth companies without a shadow of a doubt, but your risk of loss is a lot greater than it is with the other ways of investing. Just be careful to not put too much into growth or too much into Bitcoin, and only invest what you can afford to lose. The next area that I really wanted to talk to you all about, which I think a lot of people really struggle with understanding, are loans and mortgages. So I obviously, at base, I presume there's going to be a lot of aspiring pilots. They're trying to work out how they can afford to do courses, or how they can afford to get their either PPL or their CPL. I've attached, which I believe Joe has shared or is about to share, a calculator for mortgages and loans. It's very simple to use. Again, you will have my personal email address, so I'm more than happy to walk people through it. But it's very, very easy to use. You'll be able to put in figures of exactly how much you want people to, or how much you want to borrow, what interest rate you're going to be borrowing it at, and then from that you'll be able to work out how much the loan is going to cost you in the long run. A lot of people think that if I borrow £1,000 at a 10% interest rate, it is going to cost me £10,000 as long as I pay back in 10 years. That's not the case, because how it works is that it costs you £10,000 in the first year because of the interest rate, and then the next year it costs you about £9,100. So this calculator is just a very, very good and simple way for you to be able to work out exactly how much a loan is going to cost you.
Sorry to interrupt you there, Oscar. I've just got a few issues bringing up that file at the moment, so perhaps I'll share that through Base, so it'll be available on our platform for people to see there.
Perfect, thank you. Just when so it's you can also use it for credit cards. So if you're thinking of taking out a loan or buying a sofa or any item, you can use this calculator, because it will then tell you exactly how much the loan is actually going to cost you. If you take out a loan over a longer period and the interest rate is over 7%, you will pay back more than double what you borrow if the term is over 8 years, which a lot of people don't realize. So it's just being aware and cognizant of the decisions that you make. Lastly, and this is the second biggest market, is debt or bond investing, which a lot of people aren't even aware of. It is a huge market. It is what most fund managers, asset managers, investment professionals, hedge funds, bond traders, it's what they use. So I just wanted to touch on this area very, very briefly, because it's such a large part of investing. I don't want people to walk away from this seminar seminar, that makes me sound posh than I am, this slide pack without understanding exactly what it is. So if you have company A who need to, they need to buy a new machine to produce widgets, and this machine is going to cost them £10 million to purchase. They have two options. One, they can go to the bank and they can say, "Hi, Mr. Bankman, can I please borrow £10 million?" That's not always easy, because the bankman might turn around and go, "I don't really have £10 million to give you," or "That risk is too large for me, I'm not willing to do this." So what they do is, what corporations are able to do in most countries is they are able to issue their own debt. So they go to the free market and they say, "Hi, we would like to raise £10 million. It's called an issuance. And we are willing to pay people 5% for whatever they purchase." So let's say 10 investors, just to make the maths easy, 10 investors each, they all want to buy £1 million of company A's debt, and they will then get 5% per annum until the debt is repaid. The debt is usually repaid on a fixed term. So for most of these contracts, you say, "We aim to repay the debt," or "We will repay the debt by, say, 10 years. So it's very much like a mortgage, or a loan, but obviously the other way around, where the company issues the debt. If anybody here has a pension or anything like that, a large part of it will be invested in these types of securities. They are considered relatively safe if you compare them to equity investments, because they move a lot less than equity investments do. You all probably won't have too much to do with it if you start your own or you do your own investments, but it's just something to be aware of. And especially because when you either come to retire or you take out long-term loans and stuff like that, it is very, very important to be aware of exactly how it works. Now, one little tidbit of information is these debt or these bond instruments formed the basis of mortgage-backed securities. So in America, in early 2000 to 2008, you probably know where I'm going with this, people used to package up these loans and make them look a lot more attractive than they were. Because before, as I've just said to you, we had company A. So it was very simple. You look at that company, you assess its creditworthiness, and you go, "Yes, I would like to have a piece of that action," or "No, thank you very much. I think this is going to go down the pan. I'm not going to invest into it." So what people used to do, or investment banks were used to do, was they used to package them in together. So you'd have company A, B, C, D, E, F, G, all different types of loans packaged into one. It would be considered to be relatively safe. It would be sold to the open market to retail clients. And then when people started defaulting on their mortgages, these instruments that were sold to them stopped working. And that's what caused the credit crunch in 2000. Well, that's one of the main reasons what caused the credit crunch in 2008, because the banks, or the investment banks, and by default, the banks ran out of money. So it's something to you're probably not going to be investing in too much directly, but it's just something to have in the back of your mind, of something that could potentially make a difference to the returns that you're able to get when you invest. I put this slide in here because I just feel like I work very closely with pensions. I have done for most of my adult life. It is something that a lot of people shun and think on way too late. I say to people, try and save for retirement as early as you can. It doesn't matter if it's £20 a month. Try and put something away into a structured financial arrangement that you can't get a hold of the money for the long term. People ask me, how much are we putting into a pension? And there's various different pensions. And what Joe and I have agreed to do is we're going to split these sessions. We're going to do one a month. And in those sessions, we're going to go into all of these a lot more in depth. When should I start my pension is the first question I get asked. And the second question is, how much should I be putting in? As a rough yardstick, you should start your pension as soon as you start working. and you should put in half your age as a percentage into a pension. So if you're like me, if you're 32 years old, you should look at saving into your pension for retirement about 16% per annum. I know that sounds a lot, and I'm probably going to lose a couple of viewers because of saying that, but it is the truth. And that way you will be able to retire on approximately 60% of your salary. These are rough figures, and that's 60% is usually what people try and retire on. It's just something to be aware of. It's something I can't advocate enough. Trying to save a little bit. Most countries give very, very lenient tax advantages to saving into a pension, or at least tax deferrals. The UK is one of the worst ones if you're based in the UK, but it's still a very good scheme. So please do try and put some into pensions or long-term savings. That is it for our introduction session. I'm not very good with IT, so I'm going to ask Joe if there's any questions at all that I can field at this stage.
Yeah, absolutely. Just before we move on to some questions, Oscar, would you be able to just upload that file just in case people didn't have the chance to download it? Just upload it again. I think it may have been deleted.
Yeah, of course.
Great, lovely. So yeah, thank you very much for a really interesting presentation. I think there are some questions in there that we can go to now, but just in case you haven't had the opportunity to type your question in the chat box, please do so now, and then Oscar can answer any questions that you may have. So let me know when you're ready to take a question, Oscar.
I'm just trying to work out how to spot calculator, that's all. Yeah, I've just uploaded it again now. Yes.
Lovely, great. So the first question is, how do you know which crypto to invest in? Where is the equivalent of a stock market index?
So how do I know what crypto to invest into? And the last question was, is there an index?
Like an equivalent of a stock market index?
Yeah, so first of all, really good questions. I say the same thing to everybody when they ask me stock specific. So if we think about crypto as stocks or investments instead of currency, might help us here. Which one do you personally believe in is the best answer I can give you. So do your research. Make sure you understand the benefits and the drawbacks. So Ethereum is probably the second. I believe Ethereum is the second largest. Bitcoin is the largest. Ripple is third, I think. Last time I checked. I personally like Ethereum. Which a lot of people haven't heard of. It's a lot more flexible in its use compared to Bitcoin, but Bitcoin is the first, and by definition, by being the first, it is also the most well-known. So I wouldn't be surprised if you see multiple, just like you see multiple currencies in the world. We don't just have one currency in the world. We have, you have various ones. So I'm going to sneak around the question a little bit and say, do your research. Or alternatively, now you've asked me about an index, there is actually ways of investing in instruments that invest in a broad range of cryptocurrencies, and there are indices. One of the best for finding out more information on this, believe it or not, is actually Yahoo Finance. And I know Yahoo is probably not an organization that a lot of people see as being technologically advanced, but it's a really good way of looking at different cryptos or different indices. If I haven't answered your question properly, please drop me an email, and I will send you articles and indices that you can look at.
Fantastic. Thank you for that. A question here. I keep hearing about more and more types of cryptocurrencies. Will there be a limit on the number that are created?
Again, very, very good question. And I was actually asked this the other day at another investment forum. The answer is no. There is no, really, there is no limit on the amount of cryptocurrencies that can be produced. But because in reality, every single person in the entire world could create their own currency. There's nothing stopping us from doing that. But it's the demand that's going to be the main factor, because if you don't get demand and if you don't get buy-in into your crypto, then basically the price will never move, as you saw, because we had a completely straight supply curve. Because we're in this infancy, you are more than likely going to see various ones crop up, and unless they do something very different and are able to distinguish themselves properly, they are not going to be able to get off the ground. It's really hard for me to say how many cryptocurrencies I believe there's going to be. I mean, I have a figure in my head that it's going to be less than 10 are going to be the investable universe that you have. But that's not to say that there's not going to be more. If you're trying to get into the cryptocurrency world, but you want to stay away from some of its associated risks, I would say pick one of the top 5 ones, do your research into those, and go from there. Don't go into the coin offerings, like the completely new cryptos, because that's where you're potentially going to lose a lot of money very, very quickly.
Okay, great. There's another question here. Can anybody make a cryptocurrency?
Yes. There's nothing stopping anybody from making their own cryptocurrency. That's what's so fascinating about them. It's obviously a lot of code. I'm not saying that anybody can make them and it's going to take you a couple of days and then all of a sudden you're going to have a bunch of people trying to buy your cryptocurrency off you. But yeah, there's nothing stopping anybody from creating their own crypto network. The only thing you need is about 10 computers to get this here. Sorry, I'm just going back. To get this here, this decentralized permission network. So as long as you have enough nodes or computers, yeah, anybody is able to create their own crypto.
Okay. Perfect. I guess that also proves the point that you need to research these fully if anybody can make them.
Yeah.
Okay, another question here. Are savings accounts good for long-term saving? All the ones that I've seen have very low interest rates, and is it worth it? My current account has a higher interest rate than my savings account available at my bank.
Yeah, I mean, that, again, really interesting point, and you're 100% right. So interest rates that are set by governments are linked to exactly how much interest is paid in your savings accounts. And as we've all heard, interest rates are all-time low. I think UK we're 0.25. I think America are just sub 1. So you're getting very, very little on your savings. Unfortunately, we're in an environment whereby keeping money in a bank is not going to give you any return. One thing that you also need to be very aware of is that if you're getting less return on your savings account than inflation, I'm going to use the UK now as an example. UK inflation is about 2.5%. If you have inflation is how much prices go up each year. If you only get, say, 1% return on your current account, you're actually negative 1.5%, which means that the value of your money or your purchasing power of what you can get with your money actually goes down on a yearly basis. That's something to be aware of. At the moment, unfortunately, a lot of people are forced into stocks and shares, which isn't fair. Interest rates used to run at about between 5 and 7%, which meant that you were able to get a decent return from simply keeping your money in a bank. That isn't the case at the moment. If you are a nervous investor and you're more concerned with the potential downturn than uptick, there are funds that specialize in investing in corporate debt. The example I gave before with Company A wanting to raise £10 million. please drop me an email. I can point you to some. They're more risky than a bank account, but hopefully they'll give you at least a little return on your money without costing you anything.
Okay, thank you very much for that. Another question here. Where do you see the Ftse heading this year?
So I'll get my crystal ball out, right? So what a lot of people don't realize. So I'm gonna assume you're talking about the Ftse 100, because the Ftse stands for the Financial Times Stock Exchange. So you have the Ftse 100, the Ftse, which is the 100 largest companies, the Ftse 250, which is the next 250 companies, and then you have the Ftse All Share, which is the whole of the UK market. Ftse 100 is made up mostly of international companies because of the geographical location of the United Kingdom. So the Ftse 100 isn't necessarily a reflection of how well the UK economy is doing. If anything, it's the opposite. So the stronger our currency gets, i.e. the Great British Pound, the worse the Ftse 100 will do. Because if our currency went up by 10%, you would expect, because the earnings of a lot of the companies that are in the Ftse 100 are overseas, you would actually expect the Ftse to go down by about 5%, because it's about 50%. So the index that I'm more interested in from a UK-centric perspective is the Ftse 250, which is much more earnings UK, manufacturing UK, and stuff like that. I believe, and the people who know me know this, I'm not a conservative, but I actually believe that Boris Johnson, and I didn't vote for Brexit, being foreign. I believe that Boris Johnson has done a fantastic job of the negotiations with the EU. You saw that in the bounce of the UK indices at the end of last year. I believe very much that the UK economy is on very strong footing, and I think that the price is only going to increase off the index moving forward. The only thing that I am worried about right now is actually America. On the 20th of January, Donald Trump cedes power to Joe Biden. There is talks of revolution, whereby a lot of Capitol buildings are going to be harassed, for a better word, on the 20th of January. I really hope that doesn't happen. I mean, whatever you think about Donald Trump or Joe Biden or any political leader, as long as they're not harming their people or other people, I really don't see the need for this. I don't think it's the way that a democracy should work. And I think it shakes the democracy of any country to the core. But as long as America can chill out a little bit, I perceive that the UK economy is in a really strong position to do extremely well over the next 12 months. And as such, always ask people, put your money where your mouth is. Do you have skin in the game? Our fund is currently doing a big rotation into UK companies.
Okay, thank you. It's a very comprehensive answer. Very interesting. The next one is, do you envisage a world where conventional currency is replaced with cryptocurrency completely?
Yeah. Do you want me to do a short answer this time, Joe? Yes.
No. It's comprehensive.
Yeah, absolutely. Currency is, again, we go back to the supply and demand curve, right? Currency is only worth as much as people are willing to pay for it. Currency is heavy, and it costs to have currency. Currency has a carry cost. So it costs to print money, it costs to transport money, it costs to handle money, there's costs for tellers to put the money away. So if you have a business where you trade with somebody else and they go, do you want to be paid in something that's going to cost you nothing, or do you want to be paid in something that's going to cost you something? Well, the answer is very obvious. Like, you will obviously choose to be paid in something that costs you nothing. The question is, which I think is very pertinent, will governments around the world, and I'm especially looking at America, go more digital? that is probably where I see this heading, because they're going to have to evolve. Currency is going to have to evolve, as in paper money is going to have to evolve, or it's going to die out. And I mean, you've already seen it. So I'm so bad with terminology, but there is a way of calculating how much money is circulated in a society, and it has trended down for the past 100 years. No, not 100 years, but you know what I mean, 50 years. It's trended down ever since ATMs came around and plastic came around. And it's a trend that's not reversing. I mean, I can't think of the last time I paid for something that wasn't a laborer with cash. You know, we just don't have it. And I think the millennial generations and any generation after that, I think it's almost got to the stage where I get annoyed when people don't take card. So why you wouldn't see more and more move into crypto, it is definitely a move that I'm envisaging will happen. The big caveat here is obviously unless there is mass fraud. So if you get an article whereby cryptocurrency is seen to fund terrorist activities, you're going to have a big problem there, because then regulation is going to step in and they're going to turn around and go, because let's say America then goes, well, actually, if we can't control it at all, we're going to ban it. That's when you're going to see a real hard-hitting left slug to cryptocurrency, which could potentially derail it. But I personally, in the long run, yes, cryptocurrency is here to stay.
Okay, really good answer. So there's one more question left on the chat box. Please feel free to type anyone's in just while Oscar's asking this one. And if there isn't anything, then we'll close the presentation there. So final question for you at the moment, Oscar: are premium bonds a worthwhile investment?
This can be a short answer. Premium bonds have their place, right? There's nothing wrong with investing in premium bonds. Premium bonds, for those of you who don't know, it's a little bit like a lottery. So a bunch of people put money in a pot. They draw names out of a hat, and some people earn high interest, some people earn low interest, some people earn no interest. It's just a lottery. Some people claim they've had lucky premium bonds. I don't think that exists. Personally, I don't believe in luck like that. But if it produces more usually than a savings account, so there's nothing fundamentally wrong with them. But I personally don't see them as a long-term solution to your investment problems. Again, they are linked to the interest rates of a country. So when you had interest rates in the UK of about 7%, premium bonds were a fantastic investment, because you could count them usually getting about 6, 7, 8% from your premium bonds. Whereas now I think the average account earns 0.8. So it's not the same investment as it was 10 years ago or 15 years ago now. Getting old.
Okay, lovely. And one last question that's come through. Would a country having a national cryptocurrency avoid the opportunity for banks to conduct Ponzi schemes like we just saw in Lebanon?
That's a very specific question. I love it. Yes, it would, because and this is the whole point of a cryptocurrency. So I'm glad we have this slide up, right? Is that if you remove, and you can probably now see my political persuasions by my answer, so I'm sorry about this. If you remove the centralized control of a currency and you make it so that it's the people, right? Everyone is a node. You know, if you open a wallet up and invest in Bitcoin, you are part of the decentralized system of Bitcoin, and the other wallets will talk to you to make sure that you agree with what everybody else has. By definition, you're not able to do a Ponzi scheme, and you are free to trade your currency as you see fit, as long as there's someone there to buy it off you. Whereas obviously, unfortunately, we've seen in Lebanon recently, which is obviously, I mean, extremely, everything that's happened in Lebanon over the past year is all, for a very long time, it was extremely tragic. And this is, you know, just pure pouring fuel on the fire, where it's shown that people have basically been skimming. When I say skimming off the top, that would insinuate that they've left something, but actually it feels like they've taken much more than skimming. Using something like a crypto would not necessarily stop it, because you could technically still do it. But what it would do is all the nodes would show who's stolen the money. So, you know, if in my family, you know, me and my wife and our daughter, and if all of our money went to our daughter's node and she ended up stealing all of our money, it'd be very clear exactly who took the money out. Whereas in this centralized system, if you took cash, right, and you have a pallet of cash in front of you, it's impossible to say who took what cash out of that pallet.
Yeah, very interesting. I hope that answers the question fully for you. I don't think any other questions have come through, so that's probably a good opportunity to close the presentation there. So Oscar has quite generously offered to create a group on Base for any financial questions that you may have between now and the next presentation, which will be on the 9th of March. So between now and then, if you do have any additional questions with anything financial related, please pop them in there, and then Oscar will be able to provide answers to those if you can't wait for the 9th. So thank you so much for coming on. It's been really, really interesting. And yeah, we'll look forward to seeing you again.
All right. Cheers. Thank you, everybody, for attending.
Bye now.